What's going on, guys? Philip at Trade Genius. All right, follow up from last week's video. This is going to be part 2, Bitcoin in crisis. And since our last video, the Federal Reserve has announced that they're cutting interest rates to zero and they're launching a massive $700 billion quantitative easing program. All right, so that's what we call QE. Okay, so this is basically a repeat of '08, right? And again, people with large amounts of money make ill-advised bets, ill-advised investments, things break, and they come running for a bailout. That's all it is. So Bitcoin hasn't been through this. It wasn't really a thing back in '08 when things were unwinding. In the Genesis block, there was a reference to basically the peak of pain in '08. There was a reference to the England headlines, basically talking about bailouts. And so that's where this sound money of Bitcoin essentially got its start from, to be independent of all of this, right? Independent of government printing presses and central banks. So the thought is that Bitcoin should run up then in this situation, and yet we've seen quite the opposite. We've actually seen it draw down. So in this video, what I wanted to do was talk to you guys about basically how we should expect this to act going forward here. So we'll run through some charts here, and we'll get into this video and talk about all that. All right, guys, let's dive in.
Trade Genius.
All right, guys, basically we have these specials running. So if you're interested in getting into the room with us, you can go ahead and click on this $2.99. We'll get you in the room with us. Really good time right now, actually. Even though the markets are melting down, actually the way we trade, like the binary options, for example, we get extremely good trade setups. And so we've been taking advantage of that. The last couple of weeks have been really, really good because it thrives on volatility. So we get really good setups. And then, of course, Bob's in the ETF room. And then we have our crypto plays, which we just closed out a long play on Bitcoin. And we'll talk about that a little bit in this video. But that was a nice trade from sub 5K on up to 5,900. So we like that. And we're looking to reload on the next one. So if you want to get in on that, head over to tradelikeagenius.com or tradegenius.co. All right, diving into the charts. So basically, Bitcoin came off of this low here, and some of this, actually a lot of this move has been correlated to the stock market. So what we've done now is we've consolidated at this level, bagel volume node down here, and we've popped up into this weighted moving average. We're going to get some resistance there. And we also have some prior lows here that are going to act as resistance. So don't be surprised if this doesn't break through any higher here and we do push down a little bit. I do think this move is somewhat suspect. And the reason for that is because our Delta chart isn't really agreeing with this move. Here's the Delta chart. We're not getting the bluish color, which would indicate that we're seeing the proper movement in the futures contract that's traded at BitMEX versus the price of Bitcoin, the spot price of Bitcoin, like what it would be priced at on Coinbase, for example. And so usually if we're starting to move up or we're in that mode to buy the dip, what will happen is we'll see the activity on the futures, the nearest futures contract, which in this case would be the June contract. And we're not seeing, normally we want to see this. We see blue. Tells us that if we can buy a pullback, and usually that pullback will give us some kind of bounce. Here, we're actually getting the opposite, and we're not getting any rise out of the, this is the Delta line. Okay, now normally in a bull market, if you get a dip to below zero on the Delta line, it's a huge buy signal. So similar to what we saw here, right? Spike down below zero, and you get a bottom and it comes up. When things are bottoming, like coming out of a bear market, you will get an extended period of sub-zero readings, and that's what we're seeing now. So I'm not a believer that this is the bottom here and that we're going to just start going up from here. I mean, it is possible, but this tells me that we may expect this to come back down in this range and chop a little bit, and then start building off of that, and maybe we'll get a run up into having a little bit later. And it is possible that if we don't see a concerted move up, that we may not actually run up into having two. We may consolidate in this range for a while, but that would mean that we're consolidating through the rest of this month, through April and into May. So it's a little bit of an extended window for that to happen. I think we might see a little bit of a push up toward this 8,000 area after more consolidation down in this zone, and that might play out that way. All right, the next chart I want to talk to you guys about is the correlation of a safe haven asset or a flight to safety asset in times of turmoil. Now, gold, first thing you're going to hear about gold is its flight to safety. If there's turmoil, if there's war, something like that, boom, gold. You'll see a spike in gold. But when you're in a liquidity event, okay, and we're looking at 2008, so the blue line represents the S&P 500, and the gold line represents gold. And you'll notice that as we capitulated into the end of '08, now remember, this all started back in '07, so this entire move down was a very lengthy process. If you go from the top, we were in October '07 to the bottom, March '09. So, almost a year and a half of basically downward move to capitulation bottom. And toward the end of that move, we saw QE was announced. Okay, QE1. And we had several rounds since then. And now we've got a new round this time around starting. So what happened when QE was announced? Well, markets somewhat stabilized there, but then rolled over and capitulated one last time. Now, what had happened is gold moved up before the bottoms in the market. So what I look for in these situations when it's all risk off, you'll notice gold came off too, and really a lot toward the capitulation phase of this. But it also put in a higher high, and this is on a weekly basis. So this plays out over the course of a month plus, okay? And this is going to tell us a sign that, hey, we might be looking at a bottom in the markets within the next couple of months. And that's what basically we're going to key in on here. Now, gold, Bitcoin is gold 2.0. No argument there. That's just what the market is looking at it as. Other vehicles of use will come later off the blockchain and use it as a settlement layer, for example. But really, we got to look at it in terms of gold. So gold broke away from this downtrend and started rising, started to fulfill that flight to safety asset, and then also just ripped up until the end of its decade run bull run. It capped it off on this. So liquidity floods the system. Gold took off first, and gold continued to take off until this is where we started to see really just everyone start running to equity. The fear was gone, and they started piling in, and then gold wasn't really a flight to safety anymore. They risked off on gold and took the risk on into equities. So if we fast forward to today, you'll notice compared to that move that we saw back there, this is a lot more severe, a lot more acceleration to the downside in a very short amount of time. So we could actually have this flush out and be over in a shorter period of time, but be looking at a much longer period of recovery. And if you look at gold's move down, no signs of stopping. So we're not seeing anything remotely close to us saying that there's the downside is stopped in gold at all. This is going to take time to play out, okay? But you have to bear in mind how liquidity events affect safe haven assets. So now, this time around, we do have Bitcoin in this sell-off. So let's take a look at what that looks like. All right, so Bitcoin is this thicker green line. All right, now if we look at that on a weekly basis, we might be getting a possible start of a constructive bottom in here. Okay, so that's what's interesting about this is that move up on the weekly. Okay, everything else straight down. Been a horrible week in the markets. Gold, horrible week for gold. Bitcoin actually went up. So this is the stuff that we need to keep an eye on. And again, I think this is going to bottom out well before the markets, and then when the liquidity starts to seep back into the markets, and especially after halving, the production output is cut in half, and you're going to see greater demand than we saw before into that. So do the math. Retail drove it up to 20K on speculative retail action at the end of 2017 with the current production volume, daily production volume. Now we're going to cut that in half. That retail volume is going to look like minuscule compared to the big money that will be flowing in from, and they're going to flood the system with liquidity, guys. Make no mistake. They will flood it with liquidity like you've never seen before. So Bitcoin's going to inflate up, and so you're going to hedge your, basically the value of your dollar goes down. Bitcoin's going to hedge against that and go way up in value. So you'll maintain your buying power. So this is very bullish to me. If we drill down even further, you can see as we, this is back now, February 20th. This is when things started to really start to come apart. You'll notice Bitcoin followed along with the S&P 500 pretty well. And then you can see again, as we spike down to that low 4,000, liquidations, big liquidations. I think if I'm reading this, most of the liquidations on Bitcoin, I think the exposures that funds had to Bitcoin has subsided, because look what's happening now. See how we're starting to break away? This is divergent. Okay, this is the stuff you start to look for now. This is a 15-minute chart, but that's where they start on the lower time frames. So I'm not convinced this is totally over. This is the first time Bitcoin's markedly pulled away from the market. I think that we still have some more downside capitulation on the S&P. I think 2100 is definitely in the cards on the S&P 500, and I think we will have periods where this will weigh on Bitcoin. But Bitcoin went up. Market was up a little bit from the overnight lows, but still, not today wasn't that big of a deal. But Bitcoin, you'll notice on this recent rally from the 19th in the markets on up, Bitcoin took full advantage of that and then held those gains on this pullback here. Okay, so we didn't see this double dip down here in Bitcoin. We actually made a nice higher low, and then we also made higher highs while this made a lower high. And then on this most recent drop, didn't really participate, held the gains from all this. So that's awesome. I think that's really great. The caveat will be that we're not seeing it on the internals as far as the delta goes. It's not playing along. So if the delta does perk back up and we see that signal turn blue for buy or buy the dips, I'll feel better about that. So right now we have to be just be careful and be mindful that this could roll back over into the support area. Getting a pullback into the low 5,000s is not necessarily a bad thing, but I would start looking at that as an area to start really looking at legging in long for long-term holds on that. And I think also it will provide a nice level to bounce from for your shorter term swing trades. Okay, so good news, we've got some decoupling from the S&P 500 finally. Bad news, more pain is coming for the entire global monetary system. And I don't think recession is a question. It's, do we enter a depression? You got the virus that's probably not going to peak out here in the States for another 8 weeks minimum, and it goes on after that. So lockdowns, it's probably the prudent course. Not fun, but it's probably going to happen. GDP is going to take a humongous whack. And I think the story here is not really where the market bottoms. It'll find a bottom, but the recovery might take a lot longer than it did last time in 08. They should have unwound the derivatives in the market, and they didn't. And that's really unfortunate. But I think, guys, Bitcoin, I think this is where all the storylines come together, and we really start to see it play out as kind of like this alternative to the banking system. The monetary policies of the world has failed, and people are going to take monetary policy into their own hands with something like Bitcoin. So there you have it. The next segment, we're going to talk about the market internals and how they are reacting to what we see in Bitcoin and how Bitcoin is trading, and help you guys navigate the moves going forward from here. All right, guys, thanks for watching. Please hit like and subscribe. Again, if you want to join us in the room, head over to tradegenius.co or tradelikeagenius.com, and you can sign up there. Thanks, guys. I'll talk to you in the next one.
Trade Genius.